Welcome back! Now that you know all the basics of Cryptohopper, it's time to learn about technical analysis. In this video, you will learn what technical analysis is, what technical indicators are, how to make your own strategy, and how to find specific information about each technical indicator. Technical analysis deals primarily with looking at a chart and predicting the future based on the information you have. The most used chart, and the one we use here on Cryptohopper, is called the candlestick chart. A candlestick chart is made up of, well, candles. Each of these green and red objects displayed are called candles. In this instance, each candle represents one day, but they can represent any time frame you choose. Bullish candlesticks are green and are increasing in value, which means that they close higher than they opened. Red candles, on the other hand, decrease in value and close lower than they opened. The body of the candle represents the distance between the open and the close, while the wicks represent the high and the low for each candle. So once you buy Bitcoin, for example, you want to see as many big green candles as possible to indicate that your assets are increasing in value. Technical analysis relies on what we call technical indicators to take the data we have and extrapolate potential future movements in the market. Technical indicators are mathematical equations that rely on past data to predict future movements. So in simple terms, it's applying maths to the past to predict what will happen in the future. Let's look at one such indicator, the Simple Moving Average, or SMA for short. The SMA is a line on the chart that takes into account a specific number of candles. A 10-period SMA is made up of 10 candles. So the more candles the moving average is made out of, the slower it will react to the market going up or down. For example, a 10-period moving average reacts much faster than a 200-period moving average. On Cryptohopper, we focus specifically on the difference in reaction time between a faster moving average and a slower moving average. If you select the simple moving average in the strategy designer, which is where we build strategies, then you will see that you have two unique parameters, one called a short period and another called a long period. The idea is that when the shorter moving average, which is the black line in our chart, crosses above the longer moving average, which is the blue line, then a buy signal is given. And when the black line crosses below the blue line, a sell signal is given. That's all there is to it. An excellent simple moving average crossover can increase your account by 10 times in only a few years. Technical analysis is all about finding the right parameters based on what worked in the past, and hoping that it will continue working in the future. Now, one of the most important parameters for the simple moving average strategy on Cryptohopper is the chart period. An SMA on a lower time frame, like 5 minutes, results in a lot more trades than an SMA on the 1-day chart. Finding the right numbers to input in these parameters makes the difference between a strategy that will lose all of your money in a month and one that can make you a millionaire. With that said, let's create a strategy right now. First, we're going to add the SMA indicator that we talked about. We will leave the chart period at 4 hours and choose 1 for the short period and 131 for the long period. Why did we choose those specific parameters? Well, we backtested all parameters on the 4 hours chart, and these provided the most profit. When you backtest a strategy, you basically look in the past and examine how profitable your strategy would have been. However, this doesn't necessarily mean that the strategy will always continue to perform well in the future. Back to our strategy. It is essential that you know on Cryptohopper, if you want your strategy to sell based on the technical indicators, in our case the SMA, then you need to add your indicator again with the same parameters, but this time change the signals to a sell. Now give your strategy a name and description, and don't forget to save it. And that's it. You've just created your first strategy. Congratulations! You have taken your first step in learning technical analysis. So let's recap. In this video, you just learned what technical analysis is, what technical indicators are, and how to make your own strategy. You should be so proud of yourself. However, the learning doesn't stop here. If you truly want to succeed in this market, you still have much to learn. Our documentation is a great place to start. You will probably need to consult it often when it comes to technical analysis questions, since there are a lot of indicators and parameters. Remember that the strategy showcased in this video was just an example of something that can work and is not guaranteed to make profit. Something very important is that you never give recommendations to users about which strategies and products to use.